weekend all. Ira Epstein with your weekend edition of your SPDR ETF video for this Valentine's Day, the 14th of February 2020. We're about 4:11 p.m. Central Time. You know, we've had a phenomena that each Friday as we step in to this coronavirus, the market's stable or a little bit lower in many of the stock indices. And as you can see, the down a fraction, but the SPY was up and the QQQ was up. They had been fighting all day to see if we were going to be higher and lower. They managed to do okay as I see it. In the GLD, you were up at the end of the day. We've got to watch GDX backed off a little bit, and sort of the juniors, if you will, the gold miner parts. But obviously, with these ETFs and SPDRs not reopening till Tuesday morning, here's the caution you have. You're at the mercy of whatever's going to come out over the next 3 days concerning this coronavirus. It could be good news in that outbreaks keep dropping, we don't see the mortality rate going up, or it could be bad news that it's spreading within China and maybe elsewhere. Flip a coin. It can go either way on this, and that's what you're going to be at the mercy of. Watch the futures. They're going to be open Sunday night. They'll be open on Monday morning as well. They go, I think, until noon, then they reopen at 5. That's going to give you your direction as to where you're at to a degree. So when we look at the weekly chart, I'm going to show you how you construct a weekly chart and with all the different parts to it. What we'll look here first is just at a weekly as the market's been coming up, and then we're going to put the swing line study on. Now the swing line is a study that I wrote, and it looks back. So each week it's going to look to see, did you make a higher high week, a lower and low week, an inside week where you don't take out the previous week's high or low, or an outside week up or an outside week down. Then from there, the indicator will draw the line the appropriate way. I teach this in my charting course, and I teach you how to do it by hand, and then you understand what it is to put it on. But the pattern has been, and it's been this way since right through here, this August-October period, you've had periods of higher lows, higher highs, week after week. That is what the pattern has been. The market has stayed over the 18-week average of closes. That's what this one is. The 100-week is in the green. So that gives you the bias up. If the market were to correct, I'd be looking for support against what I call that line in the sand, that 18-week average. You haven't done that. The resistance has been very nice and consistent. It's been this black dashed line, which is a Bollinger Band. A Bollinger Band is an algorithm designed to keep the market trading within it 95% of the time. And that's exactly what has been going on. So this is not a new bull market. This market came out of some congestion last summer, and it hasn't looked back literally since that time frame. And the news that we're still getting seems pretty bullish on a fundamental basis. The COVID-R, as they now call it, the coronavirus, can change that, or maybe we've seen a peak. I don't know. The market, though, this is a new high close on a weekly basis. When we take a look at momentum on a weekly chart, momentum to me is either bullish, bearish, or neutral. It doesn't get overbought or oversold the way that I teach charting. So it's staying, as you can see, strong. It hasn't turned down. It got up and has just been going flatlining up here. That's still bullish as I see it. When we look at the industrial sector, you're running into resistance. You get up near these Bollinger Bands and you come down and you make a lower low. It is not the same type of chart that we just saw. It has kept itself since October over the 18-week average, and this line in the sand is held, but it doesn't have the oomph that you have in that technology sector. The energy sector has been bearish, but now did it get ahead of itself? You only close outside of a Bollinger Band to the upside or downside 5% of the time. The algorithm will take care of that. So you had a close under it there, and now the market's fighting to get back in it. That's not a trend change. This is a market that was ahead of itself. Resistance is back up at 58.69. The momentum is still to the downside, and the trend is still to the downside. When we come to QQQ, as you can see, once the market from this last summer time frame took off, it hit the upper Bollinger Band, back away. Never did get back to the 18-week average. If you wanted to see which average it fell to, run the 3-week average of lows. I think you'll be surprised. When we're looking at the emerging markets, I don't see a trend. I see a market that made a peak up here, dropped back. Now you've got a higher high, lower low pattern. Momentum is flat, and you've got some upside bias. I define bias as the relation of price to that 18-week average of closes. When you're over it, upside, downside, under it. And it's not unusual to get to it when you're looking for a direction and just fight around it. You did that here, you did it back here as well. When we come to GLD, it's friendly, bullish. Higher lows, higher highs, hits the Bollinger Band, backs away, keeps momentum up until this market gets now under 145 right here. 145.80, I say the bulls have control. If they can push on it, maybe you can get up to the upper band. It's in the 150, 120 area. So still in the bull camp. In the GDX gold miners, you still have the pattern of higher lows, and if we come back here, you've got a high on this week of 29.66. If we come back here, you got to 29.87. So the pattern is not ideal. What do I mean by that? We have the higher lows, but we have lower highs. So you're narrowing in like that. You're keeping the bias up, and you're fighting with momentum, which is still pointing to the downside. Not a pretty chart one way or the other. In TLT, warning sign to me after this run-up that we've had, we're at this area where you're stalling against the upper Bollinger Band in an uptrend. You have momentum that has gone up, but it's not on fire to the upside. If this market takes out 141.90, that is the number that I think the bulls will bail on the market at. Doesn't mean it's turning bearish there, but you'll have lost the pattern of higher lows, higher highs. So what's the number you don't want to see? That's it. Until then, the bulls still have control. You've got the higher low, higher high, and you've got momentum doing what? It's still to the upside, and the bias is up. But be aware of that Bollinger Band. It has been stopping this rally. Last, in the FXE, which is the euro currency, this is a fresh breakout from sideways action. And I realize people are going to say to me, are you nuts? Look, we're down so much in the euro. How can it keep going? I'm just a chartist. You don't kill the messenger. You've got momentum pointing down. I admit you're under the lower Bollinger Band, but that's not uncommon if you're going to break out of sideways action. So just like up here when the market was sideways trying to break out to the upside, the question is there going to be any follow through? Here you got overbought. The trend was up. The question is, do you get the follow through? And you didn't. Well, you're asking yourself the same question coming in, as far as I'm concerned, for this coming week. Do we get the follow through, or does it pull back into the bands and it's saying it wants to stay in that general area? That's going to be the big question. Going home, you don't have a trend per se. You have a higher high, lower low. You have bias down, momentum down, but you don't have the pattern of the higher lows, higher highs. You did here to the upside, and it failed. We'll see what goes on right here. You're also under the lower Bollinger Band. You only stay 5% under it, but one week out of it's not a real scary thing. Want to remind you, I put out my daily Spider ETF video, which is not this. It's way more charts than this. And it's got buy here, sell there, exact what you should do, where to do it. How do you get this? It's free right now. Go to our website, www.iraepstein.com. You'll see on the bottom right free offers. Click on it. We'll take care of it from there. You have a great Valentine's Day. Give it my best to all your loved ones, and I will see you on Tuesday. Take care now.